G'day, I'm Nic Earner. I'm the Managing Director of Alkane Resources. ASX ALK is our ticker. We're listed clearly in Australia, but we're gold mine is in New South Wales, where we have produced about 70,000 ounce a year. It's called Tomingley Gold Mine. We have a large exploration project with nearly 15 million ounce equivalent, which we call Boda-Kaiser. And we're here together in Denver at the gold conference.
We are. We're going to talk gold. You've been talking gold all week, I suspect.
I have, yes, that's right.
And we're going to be kind of short and sharp and kind of get a little insight from you as to what you're doing here. I mean, what have you come here to do? You travel halfway around the world. Better be good, right?
Yeah, well, the main reason to come to a conference like this is to meet fund managers in particular, particularly North American, who won't know about Alkane. And so, I try to meet fund managers, particularly a lot of hedge fund managers as well, who are trying to play in that small to medium mid-cap space. So we're about 400 million Australian market cap at the moment. So meeting fund managers like that who can add to your portfolio or watch what you're doing so they can at least be there ready to trigger an investment if something happens.
Right, it kind of feels like the North Americans are slightly jealous of what's been going on in Australia the past couple of years, gold price.
What, you've been society-wise or just all reasons?
Well, let's stick with gold mining initially.
Yeah.
It's a great place to be. My whole family's over there, actually. But they're looking to what has been happening, certainly in terms of the way that the share price has been reacting to a lot of the gold prices. But even the Aussies are not immune. It's got to come off a bit recently, hasn't it?
Yeah, a lot of Australian gold's come off. I mean, we had our peaks across nearly every company about 2 years ago, to be honest. And there's a fair bit of sentiment both around gold and a lot of money. If you think of people in a sub-billion market cap, a lot of people invest in that with the risk end of their portfolios. And so when they see, okay, we've got these results in gold, but now I'm thinking, lithium's doing this or rare earths are doing that, and they take money out of that and put it into reallocate as part of their portfolio. So you do see a bit of that occurring as well.
You're not rushing off to lithium, I hope.
No, we're not.
Good, man. Hold steady.
Yeah.
Right. Let's talk about the market more broadly and the way that companies have changed either their strategy, their direction, allocation of capital. Because at the end of the day, it's about being able to tell a growth story. It's about the return on capital invested.
Yeah.
Have you had to adapt after 2 pretty tough years in the gold market?
To be honest, not really, because a lot of our strategy was set almost taking this sort of period into account. So we are fundamentally an exploration company that is also very good at producing. And so we've got a whole series of discoveries behind us in our track record, and we've made other companies out of them and all that sort of thing. And that's one of the ways we've created value for shareholders. But then if you think of an exploration project, a lot of people discover it and then say, this is great, I'm going to wait for someone to buy me. Yeah. Right? It's absolutely not us. We say, well, how would we develop this? How would we de-risk it? And then we proceed down that pathway. And if someone else wants to give you a superior proposal, then we absolutely go for it. And this sort of M&A phase, we started to try and move into that in 2018 with some strategic purchases. And so, and we really looked at our capital allocation and riding through this period of, markets being closed, and we have quite a large cash reserve and we've already got debt lined up for our expansion projects. So we haven't really been forced to adjust because we thought through that this may be the situation we find ourselves in.
Right, okay, and obviously you've been the beneficiary of spin-outs with the rare earths.
A lot of money. Everyone did well out of that. Yeah.
Okay, but in terms of going forward, right, what's the production level at the moment?
Well, last year we did 70,000 ounces.
Right, okay, and the margin's quite good. You're sitting at around sort of, in US dollar terms, sort of just under 850, which is pretty darn good. Certainly in this market at the moment. But forecasting next year to be a little bit more.
Yeah, to be higher. So in Australian dollar terms, we were 1,600, and so this year we've given guidance as 1,750 to 2,100. So you divide that back by 0.65, 2/3 of that.
About 11.25.
Yeah, for US. Yeah. And so one of the main reasons for that is particularly power prices in New South Wales. So a lot of the fundamental prices have shifted in Australia, which has been Australia's been a really interesting period of time as it's come out of the COVID with the inflation that's occurring. So we've seen power prices rise, particularly in the East Coast. We've seen, of course, fuel prices rise as it has globally. We've seen steel prices rise in terms of consumables for drill rods and mesh and stuff like that. And we've also seen a lot of reagents costs rise, globally. And so I think most Australian producers over the last 3 years have probably found their costs rise by 30% over that period. Yeah.
And is this the new economic reality for gold?
It's the new economic reality, yeah.
Right, so that's the new baseline.
It's the new cost base, yes.
Right, so I think because obviously people say, oh, we're aiming for under 1,000.
Sorry, outside of course, higher grade discoveries, yeah.
Right, but I'm talking about the kind of cost baseline rather than the margin achievable.
Yes, I don't think anyone in Australia sees any of those components and labour as well retreating in price.
Right, and what's the ratio between copper gold with you guys?
Well, so in our existing production, all gold.
Right.
In our exploration project, the Boda-Kaiser, that's about 50-50 in contained value between gold and copper.
Right, okay, so that's kind of going into quite a nice green thematic, obviously.
It is, yeah.
And obviously you want to take advantage of that in terms of people's perception of you as a company going forward. How's that affecting conversations in there?
To be honest, not really, right? So inside gold, there's sort of two groups that people tend to want to meet with Alkane. One group wants to talk, what's your production? What are your costs? What's the margin? How does this fit? And their funds generally looking at having production ounces and talking to that within their portfolio as sort of a gold play. The other group talk generally around exploration and upside. So they're saying, if we invest in you, would that be early enough to see, this large system re-rate, either on the back of gold or copper?
Yeah.
But they're really more trying to understand. They're already aware of that copper thematic.
Yeah.
They're trying to understand, okay, how might this fit in, and when might the market perceive that this contains more value?
Right, and are you seeing in terms of the rules for gold and I guess imminently copper as well, have you seen that sort of change and evolve a bit? Because it used to be catalyst moments would be quite easy to identify coming down the road, right? Now, big shrug of the shoulders. It's like, so what?
Well, I think if we look, I'm obviously most familiar with the Australian thematic. I think a lot of people have been looking for value now, and they're looking at M&A within Australia, and they're saying, when is your company going to grow?
Yeah.
When's it going to maybe merge with someone, be taken over? When's it going to hit different indexes that force automatic re-ratings, which are a one-off thing but important? And so that's dominated a lot of thematic. Smaller companies like ours tended to not be as much of a part of that thematic.
Right. Okay.
So it's interesting, but in the general, more shorter-term nature of investing, that a lot of people have, it's unsurprising that we find that they're looking for those sort of catalysts. Right. And they're very difficult to predict.
They're very, very difficult to predict.
Yeah.
It's your job to do something to drive that share price.
Yeah.
What are the tools you put available to you in this new kind of paradigm we're in?
Well, number one, profitable production has to underpin everything they do, because it doesn't matter how much spin or gloss or excitement comes from other things, which can be truly value creating. If you're not producing cash flow at a really good margin, then you're in trouble, right? And
so are you?
Oh yeah, of course we. Yeah. So we've made a $50 million profit at corporate level the last couple of years, and we make about $70 million at the site level. So
it gives you options.
It gives you options, yeah. So, and of course, we're putting our cash into extending the mine life of Tomingley, and also into exploration. But so number one, that's what you need to do. Number two, for us, it's realising the value of your exploration. So we're in a bit of a market where there's a bit of a calm winds, dead calm on exploration and near-term development, and the capital market's nearly closed to a lot of people in that space. We're not in that market, but so a lot of people are saying to us, how are you going to release value from Boda-Kaiser, right? Yeah. So you've got 15 million ounce equivalent, maybe it's going to be 20 by the end of the year, right? Once we put out the updated drill results, and we'll have moved it to indicator, we'll do a PEA. Well, what are you going to do, right? What are you going to do? So of course we're doing all the normal things that you would think we'd do, looking at, are there parties that want to come and take a minority but silent stake in that project?
Yeah.
Are there JV partners who would progress it, and then, either we're a silent partner or we're equal operating partners going forwards? All the way through to, would the company be better off split in two again, because this one has a copper thematic, this one has a pure gold thematic, as well as, of course, pursuing our own M&A opportunities to try and really diversify our production base.
Right, and so that's interesting to me, because obviously copper and gold usually go hand in hand, and I think most gold companies are looking for copper projects at the moment. So maybe that answers that question. I don't know. It's up to you guys to say. But what you want to avoid, I suspect, is falling into the kind of big company mentality of, we'll make some money, we'll plow it straight back in the ground. We'll make some money, plow it back in the ground, and never actually kind of saying, well, here's dividends for shareholders. Here's real growth. So it comes back to that allocation, so return on capital investors story, where you can prove that this money will deliver scale. Because 70,000 ounces is good, but it's not quite that magical 100,000 number, is it?
Well, it's not an amount that leads to a market cap that attracts you into indexes or on people's radar, which is true, and nor is it an amount where you're like super leveraged to the gold price, right? So it's profitable, but you're right, it's not a whole catalyst amount from people's perspective. I think one of the key things that people miss in that is majors. You go into majors because you want a dividend. You want a particular yield that gets set, and often they move in accordance with yields as well as broader commodity prices. You invest in smaller companies because you're taking risk. And what my job is to clearly articulate what risk we're taking on shareholders' behalf. And in our particular case, we take our cash and we put it into the ground, and we have a very good track record of finding discoveries and then generating value from
not
that.
so shabby on that front.
Yeah, we're very...
Most people struggle to make discoveries at all, right?
We've got a long track record of discoveries. But yes, and then the view to that is to appreciate share price.
Yeah.
We won't be into a dividend paying position probably until 2026 when we finish the scale of...
Right, okay.
Yeah,
I mean, it is that scale that I guess people are looking forward to. But if you can tell that story now about where the scale's coming from, dividend company maybe, but some people like you to put it back in the ground and make more discoveries. But we'll see how you play it, right?
Yeah, in general, that's our shareholders, because that's traditionally what we've done.
Right, okay. Right, and so what would you say to shareholders now? Perhaps, we've been sitting on this for a while, saying, give us time to kind of get the exploration through the phases.
Absolutely. A catalyst point that people should be looking for is we've got Boda's resource being upgraded this quarter we're in. Yeah, because we're in September, October. No, next quarter, October, November, December. Yeah, in the next quarter. And then we have Kaiser's resource coming out in quarter 1 calendar next year. And behind the scenes, we're doing a preliminary economic assessment of that, which we'll put out. Then people can look at that and say, the Alkane team has done a good job of that, right? Or not, and there's a prescribed value around. So I think it would be sensible for people to look at that and take their own view. So a retail shareholder who's not familiar geologically, then it would be sensible to wait and understand that.
Right.
A geological shareholder, potentially they may get really excited just by reviewing that data anyway and think I'm going to get in before other people, recognise that value. Yeah.
That's a good point, actually. If I look at your share register, it is very heavily skewed towards retail. It's kind of like you started...
So 2/3 retail,
Yeah, you started going through the phases of getting the institutional guys and gals in there, and obviously the indices too. But it hasn't just made that step change, as it were. Is that something that you're looking to do when it comes to places like this?
Well, I think there's different factors. Yes, it would be good to have institutional shareholders, because that means if something does happen and you want to have capital, then you need institutions to carry that weight. Our chairman, Mr. Gandel, is just under 20% of the register. He's been a very supportive shareholder, long mining pedigree. So he runs his whole family office for that. But then other funds are typically maybe 20 to 25% makes that up. The thing is, a lot of funds only come into your share if you issue new capital, right? And we're not in a habit of doing that, so we're not crazy attractive.
And that's the trick here, isn't it? How do you do that? How do you rotate?
Well, we wait for catalysts, right? Okay. And so were we to raise money to develop Boda-Kaiser, were we to do a transaction around Boda-Kaiser, were we to do a transaction at an M&A on another level, that's the point at which we need funds familiar with us, so they may wish to join that story. Yeah.
Well, Nic, good introduction to the story. I'm glad we met, and it's nice, always best face-to-face, I think.
It is.
With these things, and stay in touch, let us know how you get on as you move through those phases, okay?
Thank you. Fantastic. Cheers, Matt.